Good morning, afternoon, and to some of you, I know it's evening. I'm Vinay Prabhakar, Chief Marketing Officer at Volante, and I'd like to welcome you to Volante Live on LinkedIn Live. Today, as a follow-up to the announcement in November of Volante's latest funding round, it's my pleasure to be speaking with Nari Ansari, Managing Director at Sixth Street Growth, and Vijay Udaraju, CEO and co-founder of Volante Technologies. We're going to be talking about why fintechs, investors, and financial institutions are banking on payments modernization. So with that, let's start with some introductions. Nari, you're probably a little less well known to the Volante audience, so maybe we'll jump in with you first. Tell us a little bit about yourself, your role at Sixth Street Growth, and what you're doing in this really interesting ecosystem.
Sure. Well, thank you guys for having me. Excited to do this. Excited to be part of the Volante story as well. I'm a managing director here at Sixth Street Growth. I've been doing growth investing in software and financial technology and payments companies for 18 years. So I have a real passion for helping entrepreneurs scale their businesses to positions of market leadership. Sixth Street Growth, we're the tech growth equity investing arm of Sixth Street Partners. Sixth Street Partners is a $75 billion diversified investment firm with 500 employees globally. The growth equity division invests out of a $3.6 billion growth equity fund, which is our second fund, as well as an $840 million expansion stage, mid-stage growth fund in companies very much like Volante. And we've made, close to 50 plus investments over the last, 4 or 5 years.
And with that portfolio, Nari, I know you spend a lot of time in payments and fintech more broadly. And I know recently you made some investments in some companies on the retail payment side, right, as well. And without getting into specific names, maybe you can just tell us a little bit generally about the portfolio in payments and fintech, the kind of domains that it covers, just so we can get a feel of your areas of expertise.
Sure. No, great question. So I think that we continue to see software and payments coming together in different verticals. So that's been a theme that's been important for us. So businesses that have mission critical software, adding on sort of ISO type merchant acquiring capabilities to be kind of one-stop shop for verticals, and we've done that in areas like faith-based giving, real estate, retail. So that's one theme. Another theme is solutions that serve the financial officers when it comes to B2B payments or different mechanisms that allow for a more efficient finance and accounting department within enterprises. And then another theme that we've been focused on is governance, risk, and compliance, particularly in the vein of financial services. It is the largest, most regulated industry on
Right.
earth. Some of these themes and tailwinds have linkages to what Volante does when you think about continued increase in scrutiny when it comes to payments vis-a-vis ISO 20022 or AML and KYC guidelines getting more and more stringent. But those give you a few flavors of different themes we've been focused on from a fintech and payments investing standpoint.
Thank you, Nari. And we'll be able to, I think, get into some of those themes today. Vijay, let me switch to you. You're already, I think, well known to most of our audience as CEO and co-founder of Volante. But probably what most people aren't familiar with is what it was like to launch Volante in the early days of the company, when it was really a startup. So please give us some insight into that.
Sure. Thank you. Thanks, Vinay. And thank you, everyone, for joining this live event. I'm very glad to be here. Yeah, no, thing is, one question you should never ask an entrepreneur is tell us about your journey. They'll never stop. Because that's a passion they have, and I'm one of them. So it's very interesting, right? Even today, I remember the early days so vividly that it's always a nice thing to go back and revisit those memories. So 2001, just after September 11th, we started Volante. Coming from the middleware background, we wanted to do something in that space. So we did a lot of good market research for the first 12 months, and then found out that there was some good amount of gaps in the industry. where the what the vendors are providing and what the industry wanted. So we wanted to fulfill that in the middleware space and still create a market for ourselves. And that led to these days everybody calls it as a lot more buzzwords like low code, no code. That's exactly what we did in those days. And within like 12 to 18 months, we were able to get the product ready. By 24 months, we were able to sign some good, high, top tier customer, financial institutions as a customers. That includes top tier stock exchanges, custodians, asset managers, banks. All of them were using our product and built very solid quality product delivered to them, built a lot of credibility within a very short time frame, and we were checking along very well. And as I said, what we did is in the beginning itself when we started, we wanted to do something which is going to last. So all the principles, all the DNA that we created in the company were more related to a company that's going to last. So it's a wonderful beginning, and then it continued, and then I'll give you a lot more information in the next 30, 60, 90 minutes.
And speaking of those early days, I think most are aware that Volante Technologies is a U.S. company headquartered in the New York area, Jersey City, New Jersey. But you didn't start out there, right? You actually founded with your co-founders the company in Silicon Valley, where I believe Nari is based as well. And then you, shortly after 9/11, really challenging time, you actually moved the company to the New York area, right? And that was an interesting decision, certainly a brave one. So maybe you could just tell us a little bit about that. What were some of the reasons for that that
Sure.
move?
No,
I'd like to hear more about that.
very, very, very good question. Generally, this was in April, I guess, in 2001. The .com bust happened, and then September 11th, and then we started the company. So it was all downturn completely. It wasn't any individual with the right set of mind would not do that, but entrepreneurs known to be crazy. So we were one of them. I'm one of the co-founders, and along with me, others were there. We all sat together and we said, "This is the best time because by the time market recovers, we'll have a product ready." Because my products do have some gestation period, and we will be ready by then because that includes market research and all that. But the beauty of that time is it's unfortunate, but at the same time fortunate for the startups because in Silicon Valley, a lot of companies, unfortunate meaning because a lot of companies were closed down. A lot of office space was available for low cost. We took a U-Haul to go to a auction to buy computers and office furniture and all that. We were able to get huge Dell servers for like $5 and 10 chairs for $5, and we couldn't fit everything into a U-Haul. We were able to get that to our offices and set it up and started working. So, and finally, we made the decision that we coming from a technology background, we wanted to create an enterprise software, which is most of the times enterprise software or mission critical, and we wanted to do that across all industry segments. But what we thought is, let's take one vertical, which is financial sector, as our focus area, and then if we can prove there, we wanted to go into other verticals. But fortunately, there is so much of market within the financial industry that we didn't have to go anywhere else, and there's a huge market opportunity we found here, and we established ourselves as leaders right from the day one, because the layer which we created, the software didn't exist before. So we defined a layer of software that was not there, so we were innovators in that sense. And then on top of it, the software we built won a lot of innovation awards in terms of creating automation and letting customers gain a lot of flexibility as well as the speed at which they can work and build complex applications to take it to the market in a record time. I'll not be wrong if they have taken it. The speed at which they could take was 10 times faster than previous versions they used from other vendors, not having this layer on top of the middleware. So achieved all that in a very systematic, planned fashion, and very glad that customers accepted us and gave us a lot more business and expansion opportunities into various other areas as well.
So I think that's an example of the famous saying, when life gives you lemons, make financial software, because that's where you should start a company. Speaking of financial software and payments, particularly, today we are known as a leader in payments, particularly payments as a service and cloud native solutions. But clearly, we didn't start out that way, right? So at some point, there was a transition in the company from maybe more generalized financial messaging and automation solutions, specifically to services for payments processing. So how do we make that shift?
Sure. So like any other startup, well, most of the startups, I won't say any other, but most of the startups, where you start and how you grow and how you expand is not going to be the same, or it will not be exactly the same. You will add a lot more products, you will add a lot more adjacencies, expansions you do. So similarly, we were also doing the same. We were observing our customers where they are using our product, and little bit of analysis, we found out that customers are using mostly in the payment space, and enhancing payments capabilities, modernizing payments capabilities. We enhanced our product as well to meet to help them out more, to serve them better. And in that process, we realized that there is a need for a modern platform which can be cloud native, and with which they can develop a lot more things and serve their customers in a timely fashion. So we came out with a lot of good, we were able to use a lot of good technologies out there, and came out with a platform which is, again, low code, cloud native platform with which customers can deliver a lot more services to their clients. And the initial success was we were the first software to process the US real-time payments. We were the first to do the SEPA payments in Europe. And we were the first for a bank which hosted everything on the cloud for their entire transaction bank. We were able to provide our payment software. And there's so many firsts in that aspect. And then we, full of 2021 to 2023, at least 2020, 2021, 2022, all those 3 years, we sold the maximum number of wholesale payments deals. This is research done by IBS Intelligence, and I'm quoting them, and this is a validation for what we have done, where the customers were, or the banks were very eager to sign up with us. And in that, again, in the tier one banks in various geographies, and taken live. A lot of good stuff has gone into that. With high performance product in a timely fashion, they could add a lot more products, and serve their customers. So yeah, to answer your question, how did we get into payments? It's basically looking at observing the customers, where they're using our product, how we can help them out better, and serve them better. At the end of the day, that was it.
So thank you, Vijay. Now, Nari, you have known Vijay and Volante for a while now, right? You're also clearly very familiar with the paytech landscape. Tell us from your perspective, why is there such an interest in payments technology providers? Why now? And what do you see as a growth opportunity for Volante that led you and Sixth Street to work with us?
Yeah, no, it's great. It's a great question. Yes, I've known Volante for probably 3 or 4 years, and so that's really very consistent with our approach, is to spend time with entrepreneurs over a multi-year period, learn a little bit more about their business, well ahead of any potential capital needs, and there could be ways that we could be helpful to those entrepreneurs, along their journey. And should there happen to be a capital conversation, at least they know us and we know them, and and then it's a bit more efficient, and everybody feels a little bit more comfortable that way as well. But it's been fascinating to watch the business evolve over this time period, as well as watch the market evolve as well. I think there's a couple of things that come into play when you think about the market. One of the things that I look for from an investment standpoint are businesses that I'd say are kind of indexed to the three C's: change, complexity, and confusion. Usually, change and complexity together create confusion. And so, are you in a position to provide a painkiller product value proposition that alleviates these three dimensions? And I think Volante does, exactly that. And so, from a market standpoint, what are the dimensions that play? You have rail proliferation, and so that's causing both change and complexity. You have compliance standards across a global tapestry that's creating a lot of different things that need to happen in terms of this. And so, these are all questions vis-a-vis like why now. And then you have legacy offerings and homegrown systems that are 20, 30, 40 years old. I mean, this is a space where if you talk to folks, you'll hear the words COBOL and mainframe more than you would in a lot of other categories. And so, the arc of history is pointing towards third-party software. A lot of banks had developed things internally for a very long period of time. The arc of history is pointing towards, cloud solutions. Each market is idiosyncratic, each vertical, each subsector, and sort of the speed with which they move to it. But the arc of history is generally only pointing in one direction. And what really drew me to Volante in the midst of all these dynamics was I found that, the client centricity, the innovation orientation, and, what I say about Volante is that they are the most modern of the proven providers, and they are the most proven of the modern providers. And that's actually a very important kind of Goldilocks position to be in, very hard earned by Vijay and the team over a very long period of time, delivering for clients, to be in that position where you can have the world's largest, globally systemically important banks say, I trust you to do these very, very important things for me because I believe that not only you're proven, but you're also modern. And so why does modern matter? Modern matters because these banks, they're focused on these days, speed, efficiency from a kind of cost and automation standpoint, and then compliance. And so Volante is in a very interesting position to address all of these dimensions for these clientele, which are, some of the most demanding clientele in the world.
And are those themes that you see in other areas of portfolio as well? So I mentioned retail payments. You certainly have a presence there, possibly lending, other areas. The three C's that you're looking for. Are we in a kind of a perfect storm, of fintech, where things are coming back together and there are challenges in every space, particularly in the cloud? Is that where things are headed across the board, would you say? Or is payments kind of unique and special?
No, I think there's some unique elements here because of the compliance elements, rail proliferation, the what I would characterize as somewhat of the, some combination of solutions out there being homegrown, custom development, plus, several more old world providers. So I think there are some unique elements to this. Now, there are analogous and like parallel dimensions to other investments we make, but there's some unique elements here at play that I think are, frankly, when you think of like, why does it take 3 or 4 days for, a wire to clear? Like in the world, in the world that we live in, like we have these, right. Like, well, that's just what it is. And it's like, well, but why? And so, you don't see some of these dimensions in a lot of the other things that, you and I and the rest of us are involved with in sort of modern society and sort of the consumerization of all these dimensions. But yet here we are in something where, I don't know, there's trillions of flow every day, but there's all these, different complexity and friction points associated with that. So there are parallels in other investments, but there are some really, really unique dimensions here, which I think, again, underscore Volante's opportunity.
Indeed. No, that's certainly true. And that's the world we very much do live in. Speaking of that world, Vijay, Nari is, I think, quite compactly covered, many of the drivers, right, that drive our business. You have, as part of your role, you spend a lot of time talking to customers, and that's a big part of our theme is that we are trusted partners for our customers. Does that, was what Nari saying, does that resonate with what you're hearing from them in terms of the opportunity for us and for them in payments?
Yeah, pretty much in the same lines. I do with the role I play. I do get an opportunity to meet with lots of heads of transaction banks and CIOs, CTOs. Interestingly, if I look at the drivers for the growth, some of them are industry driven, some of them are regulatory and compliance initiatives which are helping them to modernize, and the other one is competitive advantage they want to take. So the banks are looking at the banks for banks to do modernization of payments. These are things which come across very commonly. And the next about the modernization, um, they have systems which are either inbuilt or from other vendors, which have been there for a decade or more, or maybe 2 decades also. Some of those systems are very old, and for them to be cloud native, or for them to provide solutions which are very flexible with the low code, or with which you can develop new services in a timely fashion, is going to be a lot more challenging. So, but because we got it at a later stage than they or them, we are able to provide a lot more better technologies and solutions to the customer, whereby they can provide their customers better experience also in a timely fashion. So, coming back to the either regulatory or industry-driven ones, if you look at real-time payments in the US, the TCH/RTP, FedNow, SEPA instant payments in the Europe. If you look at cross-border, everybody wants to do, as Nari said, why do I want to wait for 3 days? They want to do real time. Otherwise, and it has to be faster and cheap. Whole implementation should not take years together. It should be months and weeks, not projects which they got used to in the past, where they do work for 2, 3, 4 years and then finally implement a small solution. Now you're modernization in entire systems within few months. So that's the leverage that we have to help our customers because of the technology choices we made, and also the market development in terms of the technology, cloud native, and all that. And if you look at the other one is on the compliance side, well, that's also on the NPA, which will be coming up in Europe, a new payments architecture, and also right now, which is going on, is ISO 20 or 22 compliance from the SWIFT. They have every bank has to comply to the new standard within a very short time frame. So all these things put together, and not to mention about the competition from fintechs for the banks. That's very key. So banks want to be a lot more agile. They want to respond to the needs of their customers very quickly, and not only that, they want to add products to different geographies in a timely fashion. Previously, when they didn't have the cloud possibilities of deployments, and you need to open a data center in the region which you want to do service. Today, that need is not there. You develop once, you can deploy anywhere on the cloud, and you can serve any geography you want, as long as you are compliant to the jurisdictional compliance. That's all it takes. So there's so much modernization happening because of the market opportunity for them to serve their, and which is helping us to grow much faster. And as I said earlier, we were able to get the maximum number of wholesale payments deals in the last 3 years. So that's a validation of what we are seeing and what our customers are looking for.
So that brings up an important point, which is that there's kind of a virtuous circle here, and it's ultimately driven by what for us is the customer's customer, right? If our customers are banks and financial institutions, their customers are consumers and businesses. There are distinct benefits to them, from payments modernization. The past year, though, potentially, that may have changed some of these behaviors and drivers. Right, early this year, we had some high-profile bank failures in the U.S., not just in the U.S., worldwide as well. Around the same time, there was a large Swiss bank that got taken over, for example. And I think most would say that while it hasn't necessarily been a full-scale crisis in banking, there have been troubled waters for sure. So the question is based on that, and I'll start with you, Vijay, first. Focusing on our customers and the conversations we're having there. Are financial institutions changing their priorities? Right? Are you hearing something from them now that is different from what led us to here?
Very good question and very valid question for this market. What for the last 6 months, I would say since May, I've been on the road. I've met with several different customers at various categories of banks, from tier 1 to tier 4, small, medium, and large banks. The strategy didn't change. Okay? Right now, it's much more with the interest rates getting stabilized, and there was some consolidation that happened in the banking industry, which is in a way good. And everybody's focused on, again, the same old retaining deposits, providing customers with their better experiences. Those fundamentals didn't change. Those fundamentals didn't change. New payment services, therefore, customers to continue to have deposits in those. So those whatever was important before is still important. Those things didn't change. And where the focus is more on what we are seeing is more on increasing their margins, improving their efficiencies in serving their customers, and at the same time be compliant, to all the regulations. So that's where the spend is, all from the banks. And when I talk about improving the margins and all that, so cloud migration is going to be a major aspect of it. The cost of data centers definitely is going to diminish over time, and providing new services like the real-time payments domestically, and also increasing the efficiency of cross-border at a lower cost for the customers. That is also a high priority for them. And then being compliant is definitely, nobody can reject that request from any of the regulators. So those are the areas where banks are focused on. So these have been there even before, but their focus has been more increasing the efficiency and cutting down the cost to increase their margins and retaining their deposits and increasing them. So.
And does that square an area with what you're seeing across the board, in the different areas of fintech that you work with, and retail payments and everywhere else?
Yeah, definitely. And I think one area that I watched that I think is quite interesting is, based on everything we've seen over the last year, that sort of tier 3, tier 4 mega regional bank and the 10 billion to 100 billion type bank is they're in a position to, I'd say, leapfrog from a technology and a customer service standpoint. The kind of the GSIBs, the ones that are 100 or really 250 and above billion, and I think it's it's an imperative for them, given they don't have the asset base from a stability standpoint that the largest banks do, and so they're going to have some dimensions, but hopefully they should be able to move faster on some of these things. We've all now seen over the last year that deposits are not sticky. If you thought deposits were sticky, you were wrong. And so how do these mega regional banks, the ones that are 10 to 100 billion, leapfrog from a modernization standpoint, given hopefully they have the agility to do that and the ability to do that relative to the the GSIBs, to be able to serve their clients in a way and to also get more efficient. Vijay talked about ROE, ROIC, all these dimensions that are incredibly important.
So I think the theme there probably is that the 3 C's, which you talked about earlier, chaos, change, and confusion. Did I get that right? Or maybe I missed one. applies to the banking world as well, right? In that there's opportunities for banks and FIs, particularly in certain segments, to take advantage of some of the crisis around them. There are actually probably 2 or 3 topics I'd like to get into today, but we are running actually a little over time here, so that's what they say. Time flies when you're talking about payments. Let's close on some predictions, and what I'll ask each of you to do here is do a two-parter, a brief two-parter. Talk about we're coming into December, the end of December 2023. So going into a new year, give us a sense of what you would be predicting in this space for next year, and also what the arc might be over the next 3 to 5 years in terms of where the industry is headed. And Vijay, I'll give that over to you first.
Sure, thanks. Near term, I guess 2024 definitely looking very good for the banking industry. As a whole, interest rates are rising and settled with the consolidation earlier. The interest in the payments as a service, as we see, is increasing quite a bit, and in our survey as well, found out that there will be an increase of 400% increase in the number of banks that are going to switch to payments as a service, which we call it as a PaaS in 2024. So, which is very encouraging for us because all of our focus has been there on that initiative for a while, and we have live customers on that one. So it's a cloud-based payments as a service solution, which our customers are using. Even large banks, tier 1 banks, are also using those. And so 2024 is going to be a big year for PaaS for us. I am sure PaaS and cloud migration, as I mentioned earlier, are going to be 2 major trends that we'll see with the implementation of real-time payments in all geographies, whatever the names we give them, TCH RTP, FedNow, or SEPA Instant, or whatever names we want to give, all of them will pick up a lot of momentum in 2024. The volumes are going to go up for the banks. Consumer and business transactions are going to go up. I'm pretty confident about that. Medium term, if you want me to answer that as well, I would say cloud will definitely dominate 3 to 5 years. After that, if I can predict, data centers are going to be a thing of past. Everybody will be moving to cloud. Majority of the payments will be in real time. It will be, as Nari was saying, why should it take 3 days or 24 hours, and the next generation will not look for a check coming in a snail mail and then going to the bank and depositing it and waiting for that to be paid to your account in a phased manner. Those days have long gone already, but that will be a lot more faster now in every country. And then if you look at hopefully there will be a lot more virtual banks, and the physical branches will also disappear in the next 5 years, if not a little longer, I guess. But definitely my prediction is a lot more virtual banks will be created, and the next generation of the youth in the world, for them, physical banks, they may not even know what those are, or even physical checks, they may not even know. So it all be real time, instant payments. You can provide services to your clients in a very quick fashion and deploy them anywhere in the world with the benefit of migrating to the cloud. So that's my predictions for near term and long term.
Thank you. We'll check in 3 years and see how those were going. And the same for you, Nari. Just give us a sense of what's in your looking glass for next year, but also more interestingly perhaps the next 3 to 5 in terms of the trends we're seeing.
Sure. So I think I always say, I think it's the old Yogi Berra quote: "Predictions are hard, especially about the future." So, a year ago, I wouldn't say I had on my bingo card, banking crisis plus, renewed Middle Eastern conflict. So, I think how we're guiding our portfolio, at least, is, I'd say three elements: higher for longer when it comes to rates, continued inflationary pressures, two, and then geopolitical instability, three. And so, okay, that's great. Now what? And it's sort of like, I think everybody is getting on with the business of living, and how you operate commercially in an environment that's very, very dynamic, right? And unpredictable. And so that's how we're guiding our portfolio these days, as we're kind of embarking on 2024 planning. We obviously have an election cycle here in the United States as well, and so that's going to have its own dynamics. And so, how these all interplay, I'm certainly not smart enough to understand these dimensions, but these are some of the things that we're sort of saying are, some guide markers to reflect upon. That said, as we think about 3 to 5 years, again, the arc of history is pointing towards third-party software. The arc of history is pointing towards cloud. I do think AI is, I'm not an AI kind of zealot. I think that, you can't talk about COBOL and mainframe in the same live stream that you all of a sudden talk about AI. But we are in this interesting time, particularly when it comes to bank technology, where I think, the future is now, but also so is the past. And so how do these banks navigate these dynamics is going to be interesting. And where does AI take root in terms of, the banking sector? I see a lot of interesting innovation happening when it comes to customer service in banking, utilizing AI. Are there other types of AI ML models that help with kind of fraud detection and things like that? Again, some of this AI elements, some of it's predictive intelligence or some of it's smart querying. These have been around for actually a decade. Now, the LLMs and some of these newer technologies are indeed novel and new, but again, how they take root in highly regulated industries is not typically very linear. But that's something that I'm sort of thinking about as well. But one thing I know is that I'll be very wrong on how all of this pans out. So I'm humbled every day is sort of what I say. But those are some views from the cheap seats.
Well, hopefully it'll be a few right things as well. Either way, I think we can probably agree that there's a lot of work to be done and a lot of interesting work as well. So with that, thank you both. Thank you, Nari Ansari of Sixth Street Growth. Thank you, Vijay Viraju Volante. It's been a really pleasure speaking with you. Look forward to doing it again. And thank you to the audience who joined in. Once again, if you have any questions, we are out of time, won't be able to take them live. But at Volante, we should be able to get back to you. Just message us on LinkedIn. Thank you so much. Have a good rest of the day.
Before you close, I just want to make one quick comment.
Sure,
I know I sounded a lot more bullish and optimistic than Nari, but that's a good balance. That's the reason I appreciate the partnership. Entrepreneurs are very, very optimistic, eternally optimistic, and I'm one of them. And having a good balance from the investment side really puts things in responsibility with profits and growth at the same time. So I appreciate that feedback and all the predictions as well, Nari. And a couple of things I just want to add, which are not directly related to what we are doing, but has an indirect impact. I know it's late, but just a couple of minutes. The thing is, what we are trying to do, what we are doing is having an impact is payments, digital payments has grown tenfold or 100-fold now, and the real-time payments. With all this, what's happening is you're able to include a lot more humans into banking world. Because previously you need to have credit cards, or previously you need to have checks and all that. Now, with a smartphone, you can make a lot of payments, and it's all digital. And especially in countries like India, everything cash is disappearing completely. So there used to be, 10 years back, 2.5 billion people were unbanked. In 2017, it's 2 billion people, and now only 1.5, a lot more unbanked to be banked, that financial inclusion will become a lot more easier, and there will be a total upliftment of a lot of underprivileged people to be equal to many of us. So we are glad we are part of that contribution. That's one. The other one is, as Nari was saying, a lot of uncertainty in the world with the wars and all that. Yeah, if the humans don't destroy ourselves with a lot of nonsense with that we create ourselves, I'm sure we'll be visiting a lot more planets and galaxies and others. So I want to be one of those people who will be flying to space sometime soon. So, thanks.
Well, just make sure that you, when you get up there, you take a selfie and send us all, just so
Will do.
it'll be a proven thing.
Thank you, guys.
Thank
Really
you,
appreciate
Vijay.
your
Thank you,
time.
Nari.